It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. Thursday evening, April the 14th, 2016. Another exciting newsletter in store for you tonight. We've got crude, S&P, gold, and euro. Markets are trading on some pretty low volume, and they're range-bound this evening before some big Chinese news starting at 10 p.m. Eastern Time tonight, and the end of a very volatile week drawing to a close tomorrow. We also have the tax man calling due on Monday. Postmark must be on Monday for all of our individual tax returns. So, of course, we can't imagine that's not on people's minds right now. So, low volume, range-bound markets. Got a busy newsletter in store for you guys tonight. We'll get ready for tomorrow. Before we jump into today's charts and look at the strategies for tomorrow's trading session, I want to remind you guys the only place to watch the full-length version of this newsletter video is on our blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, that's wonderful. Make sure you subscribe to the YouTube channel. But if you want to watch the full-length version of this newsletter, make sure you follow the link in the description of the YouTube video and join me here on the page at Sideways Markets. While you're here, don't forget, grab a free pass. Come out and test drive our trade room as a guest in the upper left-hand corner. Lower left-hand corner, make sure you join our newsletter mailing list. Promise no spam. I'll send you an email every evening when the newsletter is ready to be watched. I need your name, your email, and then when you submit your request, make sure you check your inbox so I verify your email address. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video, that we can have those ready for your own trading tomorrow morning. And of course, over on the right-hand side, I'll invite you to come out and learn more about what it means to be a student, all the strategies we use, and of course, more information about what it means to be a member by joining our free trial on the right-hand side. Ready to rock and roll? Helmets on, seatbelts fastened. Last newsletter of the week. I do these on Monday, Tuesday, Wednesday, and Thursday evenings. They do let me out of my cage every once in a while. I will not be sending out the newsletter on Friday afternoons. We'll do a prep on Monday morning with all of our students in the trade room. Thursday, April the 14th, here's the schedule for tomorrow. We do have some major news on the calendar this evening out of China. We got GDP, retail sales, CPI. Kind of a big deal. We got a bunch of Chinese data coming out starting at 10 p.m. Eastern Standard Time or Eastern Daylight Time. So that will get things shaking up in the overnight Asian and early London session and possibly trickling over here to, of course, the U.S. session tomorrow. Tomorrow's Friday, April the 15th. We've got industrial production at 9:15, consumer sentiment at 10 a.m., and of course, the Treasury International Capital at 4 p.m. tomorrow afternoon. I always remind you guys on Fridays are early in, early out. I always recommend to my clients, you're more than welcome to hold positions open in the afternoon on Friday, but very, very careful getting to new positions after 11 a.m. Eastern Time on Fridays. As you can see tomorrow morning, we've got news right off the gate here at 8:30. The big news tomorrow, the industrial production number at 9:15. And wrapping up the morning session at 10 a.m. with consumer sentiment. I doubt there are going to be too many people sticking around for the tick flows, the Treasury International Capital at 4 p.m. tomorrow afternoon. But if you are around the markets, there will be news at 4 p.m. Don't forget, tomorrow is early in, early out. It is a Friday trading session. Get to it early. Hopefully that Chinese news data will continue to get things moving well for us into the U.S. session. If not, we'll get some big news waiting for us starting off at 9:15 tomorrow morning. Moving on here, we got crude, S&P, gold, and we'll wrap it up with the euro. Crude oil is range-bound and continues to rotate inside the trading range this evening, which means we will continue looking to buy the lows, sell the highs, focus on failures, and use the 2-try rule. Buyers want to see sellers fail at range lows and, of course, at support levels below the range, while the sellers want to see the buyers fail at range highs and resistance levels up overhead. Here are the key components right now to the chart on crude. We've got a trading range and a possible triangle here this evening. The trading range goes all the way back to yesterday. If you recall from yesterday, we talked about this move pendulum swing, right? Swinging up. Pendulum swing, swings down. Pretty easy to see that move coming, and also very easy to see it going right back up where it came from. Now, this is a pretty big clue. We had a real strong move back, pulls back, can't quite make the double top, can't finish off, and it collapses back down. This is exactly what you'd expect to see out of a balanced range-bound market. So as you can see here right now, we get a trading range on the chart from 41.83 down to 41.34. It's the exact same range from last night's newsletter, right? We don't see this very often, but we do see this from time to time where we'll see up to 2 or 3 days where we use the same range. Usually what happens is by the end of the third day, which will be tomorrow, usually we found some direction and we're trending in one direction. Until that happens though, we need to make sure we continue to follow the plan for a range. Most important things here for a trading range, we got a bunch of these here to talk about tonight. Most important thing, first of all, is rotation. When you find a trading range, we expect rotation from low to high, high to low, low to high, high to low, low to high, right? Rinse and repeat, back and forth. The next thing you want to remember about a trading range is to look for failures. I'm looking for sellers to try twice at the low, fail to buy it back up. I'm looking for buyers to try twice at the high and sell it back down, right? We call that the 2-try rule. Focus on failures. The next thing you want to remember about a trading range is the pendulum swing. We have a level of support below. We call that a range expansion. And we have resistance above, range expansion. We have a pendulum, right? We talked about this last night, where, of course, let's say the market pushes down, right? Sellers try once, sellers try twice. They can't quite get to that target they're shooting for down to the next area of support. Pendulum swings down. We wait for the sellers to fail. We expect to see price shoot higher, and we expect to see the pendulum swing all the way to the opposite side. So remember, when you look at a trading range, buy low, sell high, focus on failures, look for the 2-try rule, and don't forget about the pendulum swing. And we see an example of that here. Pendulum swings up, pendulum swings all the way down, right? And that's exactly what we're talking about. Buyers try once, buyers try twice, and we fail. Buyers try once, buyers try twice, and they fail. As you can see here, too early this morning, obviously, right? Sellers tried once, they didn't get anything else out of it, and they immediately failed. That will happen from time to time. The most reliable ones, though, are going to be after they try twice and fail. So we know rotation. We go from the low to the high, back to the low. Where should we be going next? Back to the high, back to the low. Got it? Look for rotation. Use the 2-try rule. The ideal scenario right now is the bulls want to see seller failure at range low. Once, twice. Would love to see these sellers try one more time. If they fail, we can buy it back up. Pushes down to 40.85. Failure, push it back up. Right? So buyers want to see sellers try twice at range lows to buy it back up. Buyers want to see sellers try twice at support at 40.85, buy it back up. And of course, the bears want to see pretty much the exact opposite. Buyer failure at the high, 41.83, buyers try once, buyers try twice, sell it back down. Up we go to the next resistance area, 42.32, buyers try once, buyers try twice, and we sell it back down. Range rotation, the 2-try rule. Focus on those failures, and don't forget, if they push it way down, then they fail, right? We expect that pendulum to swing way back up. Got a pretty good plan there for the oil. Most important thing is just let it try to break out. Wait patiently for the sellers to fail at the lows or at support. Buy it back up. As it pushes higher, wait for those buyers to fail at resistance, sell it back down. And again, at some point tomorrow, because this will be the third day inside of a range, we are expecting one of these attempts not to fail on the second attempt, right? That's how you know when we have a new trend that's developed. So of course, if we assume here now the buyers break out, right? They try twice, they're successful. Now we know, be looking in that direction. We're going to be trading this market live in real time tomorrow morning in our trade room. Come out and join us, and we'll walk you through the proper ways to trade a range. Moving on now to the S&P. The E-mini S&P is bullish with a spike in channel this evening, but we have a recent trading range that may interrupt the rotation back to channel highs. The buyers want to see a trap low below that channel or a test of the correction zone for the best entry back higher, while the sellers would love to see a trap at the high of the range for a way to sell down to the correction zone without having to sell the low of this channel. As you can see here right now, only a few technical clues on this chart this evening. We have a bull spike in channel, bull spiking channel, and we also have this little trading range. This trading range has a bearish bias to it. So bull spiking channel, bearish bias to the trading range. First of all, talking about a spiking channel, we've seen a few of these this week so far. Couple components here to a spiking channel. First of all, the rule of three applies. 1, 2, 3. After the rule of three, then we expect to see a pullback into the correction zone. The correction zone being the base of the channel to the first test of the channel, pull back, seller failure into strength, strength into pullbacks, pullbacks back to a new high. If they fail in the correction zone, sellers start gunning for the beginning of the spike. Okay? We also know that we have a trading range, and a trading range with a bearish bias, that is a bearish move into a trading range. Now you guys know more about trading ranges, right? Rotation. Because of the bear bias going into that trading range, a trap high, buyers try once, buyers try twice, and a sell. That's the most desirable way to trade a range when we have a bearish bias to it, and then find that range expansion, and that becomes the target, right? Target at the opposite side of the range, target at the range expansion. Now, if the buyers want to take this higher right now, you get that channel here we're seeing. If the buyers want to take it higher now, they've got to hold that pullback. If they hold that pullback, they should have no problem getting up right to the high of that channel and then using channel rotation to buy the low again. Everything's pretty much going to hinge here now on what happens at that high. I would expect the sellers are going to love the opportunity here to sell that, because it will allow them to sell without selling so low, right? Without selling so close to the low of that bull channel. Sellers would also want to see a price break down and hold below the low of that channel for another selling opportunity if it breaks down, because we have that correction zone waiting for it down here. So, as you can see, back to the chart now, here's your bull spiking channel. Rotation, we've got 1, we have 2, we have 3, we got one more move up and one more dip back down until we anticipate seeing that correction. Now, obviously, there's no guarantees in this stuff. So for all we know, this thing may pull back right now into the correction zone and then go higher. Okay, so we have to be open-minded for everything. It takes a flexible mind. It takes a very determined individual, but a very flexible mind. You've got to be open-minded to everything if you're going to be successful in the long run, because the minute we start forming a bias, or the minute we start saying this can't happen now, is the minute that we end up self-sabotaging and taking trades that we really shouldn't be taking. So we know we get the bull spiking channel. That bull spiking channel has a correction zone. That correction zone is down around the 2072 and a quarter, 2072 and a half. Okay, so we expect to see price at some point here pull down to the correction zone. Seller failure into strength, strength into pullbacks. Once the buyers hold the pullback, they've got control, and the target, of course, back at that high at 81 3/4. If it does break below this low, that will adjust the measured move lower. So, of course, we'll be looking for a larger measured move if we do correct below that C point between now and the move back higher. We also have that trading range here, and that trading range is clearly going to get in the way here of both sides of this market. It is a bearish bias to it, which means the sellers would love to see a trap high, buyer fail, and then sell it back down. That way they don't need to be selling into this rising support trend line, right? That's the best part about a trap high. Then they're not selling to the low there. If they can't get to sell at the high, if it does break down, they're looking for a breakdown, a pullback, holding, and then, of course, a small move back to the correction zone, with the ultimate target being back at the low of day, and then starting to gun for some of these prior swings, because if you look left here, you'll notice this is just one very extended spiking channel that we talked about from 2 days ago. So sellers will be gunning for, of course, the correction zone is a short-term target, today's low, prior swings. These are all going to be major swing levels that those sellers are going to be looking for if they can take control of it. The only way, though, these sellers can take control of this market is to get a lower low and hold a pullback. Even then, though, it doesn't guarantee they're going to get very far, because you have a correction zone right there, which may result in sellers.